From Fifth Avenue to Wall Street, fewer Wall Street workers lost their jobs than originally forecast. A report from New York State Comptroller Thomas DiNapoli says job losses in the financial district may not top 35,000. That is 12,000 less than predicted. Even so, the report goes on to say that the financial industry is not adding jobs steadily. Employment in New York City's financial sector is down 9% from its peak just 2 years ago.
All right, the man himself, Thomas DiNapoli, joins us now on set to discuss his annual report on the city's security industry. Tom, welcome to the show. Thanks for joining us.
Nice to be with you.
Let me first ask you, this is better than expected. I mean, is that a good thing for the state and the city of New York as well as Wall Street?
In the long run, I think it is a good thing. First of all, we've been waiting for some good news for a while. I don't think anybody should read more into this, although we're not going to see a quick return to the kind of profitability that Wall Street had a few years ago. We're not going to see a tremendous uptick in the revenue stream to the city and the state. But it does show the recovery is happening. That we saw September, actually, we projected there was job growth, jobs added, about 3,600 jobs added in securities industry in September. So that's better than had been projected. The job loss we don't think will be as high as indicated. We see it going no higher than 35,000 job loss. That's still 35,000 New Yorkers out of work. So we're starting to see a turnaround, but we have a long way to go.
All right, you know, a long way to go. I mean, also you've got fewer firms to play with, right? And that you certainly noticed in your survey. You were surveying fewer firms this time around.
Absolutely, absolutely. So you also have fewer employees. On the other hand, now that we're getting some preliminary information about the bonus pools that are going to be available, that might suggest that for individuals, the bonus amounts may be significant. The issue there, we'll issue a report in January. I'd be happy to come back and talk about our bonus pool report then.
What are you expecting to hear?
Well, you see, we're probably going to see some big numbers, but the question is going to be how much of it's going to be cash, and that's important to the state because that's where we derive revenue from the personal income tax that comes from that.
That's an interesting tug of war, isn't it? Because while the administration wants less cash, obviously, in the bonus pool, you want more.
Well, that's
because we need that tax revenue.
It's that double-edged sword that we talk about with Wall Street all the time. And compensation reform is still evolving, so we don't know how much of that will be in deferred payments, options, and so on, rather than cash. But there's still time for us to do that analysis. But that's why some people, when they first heard our report, they said, oh, great, state has money problems, this will help bail us out. No, we're not going to see the immediate infusion of revenue from this good news. But we hope that it means that better days are coming sooner than later.
I'm curious, in the survey, did you see any parts or any aspects of the financial industry where there was the start of some hiring or nothing?
Well, we did see in September, we just saw across the board an uptick in some jobs being added. Again, it's in the context of an overall loss, so it's certainly not
net,
reversal.
We're still down.
We're still down. That's really the main point.
Do you see, though, I mean, a breakdown as far as inside the industry, which financial sectors, I guess you can't call them sectors because inside the sector, but which parts of the banking industry are doing better and which parts are...
We didn't get that kind of detail, but as we do further studies, we're going to see if we can break that down.
Clearly, CDO traders, for example, probably aren't as much in need as they once were.
Probably
Auction
not.
rate securities
There's a lot
guys
out there, too.
Yeah.
Hey, let me ask you, though, you did also, though, get some indications about kind of what's expected in terms of volatility, correct?
Well, yes, volatility is still going to be with us, but I think what we're also starting to sense is that you're seeing the industry become more predictable and more stable in terms of its return to profitability. But there are so many unknowns. We're still, I think, in so many ways going through uncharted territories. And for us, again, from a state perspective, we want to see New York still be the global capital for finance. We want to see jobs added. We want to see money being made. But in the short run, we really want to see revenues coming back to the state. And because of the credits that some of the companies have, because of the lost years, we don't know how soon this recovery will translate into the kind of revenue stream that the state would like to see. So there's still a lot of uncertainty out there.
We talked with Alan Blinder earlier and about the potential for a tax credit for creation of new jobs. I mean, is this something that the financial industry, that the state wants to see to kind of help create jobs here, particularly the financial industry?
Well, that's the big question. You know, right now we have a gap that I estimate is going to be as high as $4 billion, especially if the state legislature and the governor don't come up with a deficit reduction plan. They're in Albany right now as we speak. We need them to take action. So it does become hard to argue that we can afford that. Obviously, the federal governments are doing a lot to help turn this around. That's probably more likely source of that kind of help rather than the state.
I mean, so many states are struggling at this point. I mean, New York State, rather?
New York State, you know, the Pew Center just had its list of the 10 worst states in terms of fiscal condition. New York did not make the bottom 10, but we're not in great shape. You know,
it's already we're not in great shape.
We're not in great shape, and a lot of it has to do with the need to make some tough choices about spending. We've got to control spending in our state.
Well, and taxes,
ways that we have.
I'm sure.
Well, and that's the problem with the last budget go-around. Taxes and fees were added in so many areas, and yet we still have a budget gap. It means spending is the issue we have to address.
Come back in January, though, and talk about those
Look forward
bonuses.
to it.
Tom, thank you so much.
Thank you so much for joining us.